In about 30 minutes' time, the National Bureau of Statistics will be giving us the July numbers, and largely expected to show still a soft print across most parts of this economy. A lot of people are wondering, economists included, why monetary officials have not done something more aggressive to address the demand side of this equation. What do you think?
Well, I think there is a conviction, a belief at the very least, that the effectiveness of monetary policy is much reduced compared to many years ago, and that the overall economy is no longer very sensitive to interest rate cuts. So on the expansion part, of course, fiscal policy, there's still room, but as we all know, fiscal policy is also constrained. But I think looking at the broader issues here, first of all, the credit cycle that we experienced after 2009, I think in terms of reining in the financial system, reining in credit-driven booms, the government officials are very careful. There's now a much more emphasis, a greater emphasis on kind of almost like harnessing resources to go after the important things like high tech and innovation. And I think ultimately the belief that this kind of Keynesian demand-based stimulus, the solution to a big deficit in aggregate demand through monetary policy, I don't think there's enough conviction for that to work among the policy circles.
And from what we saw in the credit data, it's now fanning these fears of balance sheet recession. How big are those risks, you think, Keyu? And how do you actually determine whether China is in one or not?
Well, if you look at especially private companies, I think they are, and as has always been the case in the Chinese economy, suffering the most in economic downturns. There's almost a credit paralysis around, and some of this due to economic factors, but some of it is also due to more political economy-driven factors, where state banks, again, especially in downturns, are very, very reluctant to lend to private companies because they don't want to take the risk, and instead, of course, there's a bias towards the state companies, and of course, the capital markets are not doing well for the non-public companies as well, and so there's a definite credit squeeze, and it almost seems like there's an extreme kind of division in the economy where there are a certain number of firms that are doing pretty well in high-tech sectors or in manufacturing, export-oriented sectors, but then the majority of the firms are really seeing a struggle. And again, some of it is down to the proximate factors, which is real estate driving down investment and overall confidence, but a lot of it is also driven by this political economy reason.
Right. Okay, running the risk of oversimplifying what you just outlined is a fairly multifaceted and complex issue. What then is the solution here? Where would you start?
Well, first of all, China shouldn't be really practicing austerity during a downturn. If you're looking at wage cuts, or some certain aspects of increases in taxes, reduction in government spending, government expenditure, that is not really quite the policy prescription that the economy needs. Of course, local governments are fiscally constrained, but of course there's room in the central government fiscal space, reducing debt loads and spending on new infrastructure, on all kinds of ways to increase consumption and to offset the real estate investment contraction is very important. It's something as specific as let's take out a government-based fund, to deal with the pre-sold units of the ones that have come into trouble in the real estate sector to boost the confidence. There are a variety of ways to address these issues.
You mentioned what's really kind of the core of why we're seeing growth being hindered. Obviously, a lot of economists in your field talk about structural issues, whether it's demographics, the like. You're saying it could be politics. Can you flesh that out a little bit on why?
Well, the objectives have changed, right? This powerful economic engine in China worked really well when everybody's incentives were aligned. The local government officials were going after GDP and investment, and they were rewarded for taking a certain level of risk and being entrepreneurial. Now the objectives are things like, of course, broader social objectives, which are important, political loyalty, which is important, and geopolitical considerations, and so forth. But this model really works when there's a singular focus. We can feel that there's now much reduced incentive imperative at the various governmental levels, and therefore at the private sector level of pushing forward the economy. When a country gives up the pro-growth agenda, that is when when politics drive the economy, we most certainly see a slowdown around the world and in history, in fact.
Okay. Do you think the recent moves, I get to your point there, the recent moves from the central government to take on a larger role in terms of economic policy, for example, taking on a bigger fiscal burden, the revenue sharing mechanism that they talked about a few months back, do you think that goes in the same direction to address some of the issues and, I guess, misaligned incentives that are currently plaguing, of course, the transmission of economic policy? Let's put it that way.
Well, the question is, are the quantity of these stimulus, are they large enough? Have they come a little bit too late? But most at the core is, we kind of need a southern tour of 1992, Deng Xiaoping around the country, boosting the confidence, saying, going forth with economic reforms, putting economics back to front and center. And that's going to give the signal that that's what they're going to have to work on. Now, let me just add that there are social considerations also in the objective function, which is understandable. We don't like massive amounts of inequality, the environment, and geopolitical national security considerations. But look, if you're China, if you're going after trailblazing innovation, you're going to have to tolerate a few people getting extremely immoderately wealthy. Is that something a socialist country could tolerate?
So I got to ask then a very simple question. Your book is called The New Playbook. What is going to be the new playbook now?
The new playbook is that economic growth is not the only objective, and it's trying to foster a model to achieve almost impossible, which is to reduce the fallacy of the capitalist world with widening disparities and all kinds of anxieties and chaos. The question is how it's done. That's a question mark that few countries have really figured out. And China, in the new playbook, is trying to balance this kind of growth and inclusiveness and a variety of other things. But the model needs to evolve and adapt in order to achieve some of that.
Okay, let me ask you then a direct question. Do you think the economic planning structure is currently formed enough to be able to address some of the policy prescriptions that you laid out? What needs to change effectively?
Well, the model is very robust in scaling up. The model needs to change to be more flexible, to really increase internal demand, internal consumption. We need to rely on experts, real economic experts, to outline a consistent short-term and long-term path forward. The short-term is very important. The Chinese focus on the long-term, but guess what? We are currently experiencing a big drop in aggregate demand, and you need the kind of Keynesian stimulus to stave off the risk of a further economic collapse.
Keyu, very quickly, what doesn't worry you?
I don't worry about the demographic aging and structural problems, including the debt issues, because these are not fundamental what's at core. China has a good few decades of growth to grow, growth to achieve, if the reforms will continue. Look at the billion people in the rural areas, undereducated, underemployed, the service sector, only 50% of GDP, of course, the technological innovation. There are lots of things to do. There are deep-seated, deep-pocketed reforms to undertake. If the objective is placed back on economic growth and reform, I'm very positive that China will be one of the greatest contributors to global growth in the coming decade.